Nothing to complain about, Shweta. Good morning and welcome back. I think you missed the market rally all of last week and 2-3 days prior to that. And yeah, you were on holiday, so no complaints there. But I think the kind of rally that we saw last week tapered off a little bit. Okay. It's not that the markets have gone down. The markets have been growing, but not growing at the same clip that they were growing at earlier. So this morning, like I said, Sensex is up about 0.3% or so. 230 points as we speak right now, 10:01 a.m. on the clock. Sensex is up about 233 points. Nifty in line, up again about 0.3% at 65 points or so. Right now, the Nifty is very clearly at again in the range of 19,300. That was the key threshold that got breached, that got crossed, and the resistance is likely to come maybe at about 19,500 or so. Okay. Until then, I think the markets are more or less in the green and a flattish opening. Of course, a lot of data coming in globally as well. US markets on the back of job data, which wasn't very promising, closed a little in the red on Friday. Asian markets have been all right following US markets. India has been a bit of a differentiator that way in the color of the mood of the markets, and holding its position fairly green, and no real immediate triggers that one can think of that should spoil this party for the markets.
Okay, any trends that our audience, our viewers should look out for this week?
So some of the trends which, of course, I mentioned US job data that came on Friday, how that is going to play out for the US markets and therein for the Asian markets is going to be something that may define Indian markets. On the European markets, of course, they had edged a little higher on Friday, and the stock 600 index was up about 0.1%. Let's see when the US and the Europe markets open, how that goes. On Asia, things are looking fine. I think one important factor to look out for this week is going to be HDFC being replaced by HDFC Bank, the HDFC Bank-HDFC merger that happened. On 13th of July, that merged entity will be now listed as HDFC Bank and not HDFC. So HDFC ceases to exist on the stock markets, and in the Nifty 50 pack, it's likely to be replaced by JSW Steel. Okay. So the top 50 companies too had HDFC titles on them. Now that becomes one entity. The slot opens up for one. So JSW is going to come on the main index. And then let's see how it goes from there.
All right. So after rallying for literally a week and a half, it looks like market is tapering down. We'll, of course, keep bringing you all those details later on the show at about 4 o'clock. When the markets close. But shifting focus now to another pain point that is bothering consumers, which is the prices of tomatoes. Now, tomatoes are as expensive as 180 rupees per kg in certain parts of Delhi and NCR, and the prices are likely to remain high. There are reports, of course, coming in that the prices could get even further higher as unseasonal rainfall, or rather rainfall that is lashing parts of northern India, particularly Delhi, NCR, Himachal and Uttarakhand. But all of that could also mean that the crop that was sown would come down, which eventually means that there will be more tomatoes in the market. Prices could come down.
Shweta, I liked that report when it came out. In fact, this came out in FE this morning. And somehow it seems to be a little counterintuitive given the rain situation and the flood situation in both Himachal and Uttarakhand. Now, of course, prices by, let's say, the 30th of September, 30th of June, if I remember correctly, had already surged to about 100 rupees a kg from about an average of 20 to 25 rupees a kg. So prices had gone up about 4 times. And then we saw the rally pretty much like the stock markets in the tomatoes as well. And in some parts of the country, Ahmedabad, for example, we reported on Friday, tomatoes were selling for 250 rupees upwards per kg. Come back to Delhi, I think it has now settled to about 140, 150, but it had reached a peak of about 180 as well. But reports now suggest that the next 2 to 3 weeks could see some fresh stock coming from Himachal and Uttarakhand. Okay. And that should hopefully keep prices under check. But again, look at the rain situation. There is flooding both in Uttarakhand and Himachal. We've seen the landslides in Kulu, Manali. We've seen the kind of flooding in Haridwar, where so many pilgrims who are on the Kavod Yatra have actually drowned and lost their lives. So overall, it's not just bad news for the supply chain of tomatoes, which, remember, is a perishable commodity. It can't stay in warehouses or in transportation or in a wet scenario for a very long time, because they're just going to rot. And when they rot, there's no point getting them into the mandi. But with this whole flood situation, there is a great likelihood of the tomato crop actually getting rotten in the warehouse itself before it makes its way to Delhi, NCR, or anywhere else in the country for that matter.
Right, and some of these passes that have been closed down due to rainfall and landsliding, of course, as you mentioned, in Himachal, in Uttarakhand, are also crucial passes for freight movement, which essentially means that tomatoes, as you pointed out, will not come here. It's a perishable commodity, and they will likely perish if the roads remain blocked.
Exactly. So if the roads remain blocked, if the rain continues unabated like the way it has continued, I see it may get further delayed, if at all any good crop makes it at all. So reports are suggesting 2 to 3 weeks is when we could see prices ease.
Softening.
But I'm not sure. I think it's going to be softening of the tomatoes itself rather than softening of prices. So I think as consumers, as citizens, we should brace ourselves for prices to continue in the territory they are in.
Right. So prices will likely remain high in the territory of almost upward of 200 rupees per kg. There is no likelihood of prices going down anytime soon. Of course, conflicting reports coming in there in the newspapers. But from what we're picking up right now in northern India, in western India, unabated rainfall continue to hamper prices and continue to hamper sentiments of homemakers and chefs who are hoping to use tomatoes in days to come. But we're going to move on now to another important story that we're tracking from corporate India, from the startup economy, and the story of BYJU'S, of course, continue to make headlines. Amit, BYJU'S, the serious issues, of course, at BYJU'S, but latest what we're hearing is a serious fraud investigation agency, which comes under Corporate Affairs Ministry, is likely to look into issues such as corporate governance, problems with management at BYJU'S. All in all, it appears that news is only tightening around BYJU'S.
It's likely, or it has already initiated investigations, serious issues, and for that, serious frauds investigations office. What they want to investigate are not just governance lapses, but also financial reporting compliance failures. So these are not confirmed reports, at least they have not been confirmed by the people at BYJU'S. Right. But the investigation, it seems, has begun into these two areas, corporate governance and compliance in financial reporting. So these are the two things that have happened. Corporate governance became an issue when 2 weeks ago, 3 of their top board members basically stepped down, and following which their auditor, Deloitte, also stepped aside.
Right.
Yeah. So that is when light began to focus on these areas at BYJU'S. After that, they set up, as we spoke last week, the board advisory committee, which would advise the CEO, Baiju Ravindran, into how to basically go about these matters in the days to come. Baiju Ravindran has committed to this board that by the end of September, the books of 2022 will be audited, and by December end, the books of financial year 2023 will be audited. So that is a confirmation, that assurance that he has given this newly elected board, not elected, basically nominated board, and let's see how it goes from there. This investigation has begun, so it's only adding troubles to BYJU'S.
Absolutely. Karthik, I was sitting on this very chair about 2 weeks ago before I went off, and we were discussing why it's important for Baiju Ravindran to come out clean. And he did. In fact, in the last 2 weeks, he's addressed members of not just the board, but also employees in general, promising them that the company will come out clean. There is nothing to worry about. There are no lapses in corporate governance. We have done what we could, is what BYJU Ravindran said, and then of course promised a timeline. It's a little too late perhaps, or do you think there's still a turnaround time for BYJU'S?
No, it's definitely fairly late. How late, honestly, we don't know, and let's see what comes out of those books that are stashed away. Now, from what we understand, by end of September is when the books for FY22 are going to be audited, and by 31st December this year, calendar year, you'll have the books for FY23 being audited. But what really tickles my imagination right now is specifically SFIO getting involved, and what does the Serial Fraud Investigation Office really do? And that is where new stories are likely to emerge. Now, what does SFIO do? SFIO primarily is responsible for investigating and prosecuting complex corporate frauds assigned under Section 212 of Companies Act 2013. What it does not do is that SFIO does not investigate fraud or criminal charges against any type of individuals, which means this is an inquiry into BYJU'S and not specifically an inquiry into the founder of BYJU'S and the CEO of BYJU'S, BYJU Ravindran. But what is this Section 212 of Companies Act, which defines corporate fraud? And this is where my imagination gets to, get tickled a little more. Now, the Section 212 of Companies Act 2013 deals with the powers and duties of SFIO. It enables SFIO to investigate any company which seems to have violated any provision of the Act or is believed to be involved in any form of fraud, conspiracy, money laundering or mismanagement.
Those are some serious
issues,
areas.
Right?
Absolutely.
So, fraud, conspiracy, money laundering, mismanagement. Mismanagement, we know. If it pertains to any of these other three, fraud, a willful fraud, conspiracy to actually swindle money, or money laundering for that matter, I mean, that's why I'm saying let the books get audited and let's see what comes out of them. But 3 board members resigning, and these 3 board members representing the seats of the biggest investors that BYJU'S had, which included Peak 15 Capital, earlier called Sequoia, Proces, the Dutch, Netherlands-based company, which has pretty much devalued BYJU'S, Swiggy and a lot of other companies, Indian startups which they funded, at least devalued on their own books. And then of course you also had, who's the third person who resigned? Jan Zuckerberg. So so this is the Zuckerberg investment into BYJU. So these are 3 very serious venture capitalists, very serious players in the startup ecosystem, in the VC fraternity, who have resigned. The same day, the auditor resigns as well. So there is something that all of them saw, knew, did not come out and venture explanation of immediately. And now you have SFIO. Now, we on this show and otherwise have pretty much been crusaders of saying that the Ministry of Corporate Affairs needs to look into unlisted companies in equal measure as listed companies are looked into. So their financial reporting and the disclosures that are mandated for listed companies that are traded on the stock exchanges, should be pretty much in line with even unlisted companies, because at the end of the day, you are talking about investors' money, not retail investors. In this case, it's institutional investors. You are talking about employees. You are talking about a product or a service being rendered within the shores of India and even abroad. So the sense of responsibility, the sense of corporate governance that startups should be governed by should not really be any different from any other publicly listed company at the end of the day. So by SFIO coming and starting this investigation, and this again is just a Hindu Business Line report that suggests, and then other news agencies also picked it up. But of course, squarely has been denied by the lawyers of BYJU'S, and they've said that they have not received any intimation yet. But the name of SFIO also coming in, it sees that we are talking about something serious here.
And if nothing, it's a dampener when it comes to sentiments around BYJU'S, which is now, as you pointed out, has been battling various allegations, has been also battling exit of stakeholders and their representation on the board on the same day that its auditor resigned. They are of course looking at a new auditor. They have a new auditor on board.
BDO is already on board.
Is on board, but all of this in toto does not really augur well for BYJU'S. We'll of course have to wait and watch out for how that pans out when the SFIO starts its investigation. Remember, these are news media reports. None of this is confirmed just as yet, not just from the agency, from Corporate Affairs Ministry, but also from BYJU'S. There is no confirmation of this report just as yet. We're going to shift focus to another important story that we're tracking, and that is coming in by the way of India's favorite car maker, Maruti. Maruti, it appears, Karthik, is now also becoming and taking the biggest share of the pie in the 10 to 20 lakh rupee car segment. So not just the small cars, but also big cars, as some would say, you know, segment within the SUV. So you have the compact SUV and a couple of other, you know, to name two exact models. They came out from Maruti's kitty, which is one being Jimny and the other their MPV. Both of them are doing well for Maruti.
The MPV Invicto has only just been launched, I think, on the 5th of July, if I'm not mistaken. So deliveries are yet to come out. But yeah, you know, the 10 to 20 lakh rupee market is also not completely dominated by SUVs. In fact, a lot of small cars also, if you take the top model within these small cars, would easily be breaching the 10 lakh rupee figure. I don't know how much the Swift costs. Maybe, you know, Amit, if you could do a Google search and check. I think the Swift would,
absolutely,
or the Swift Desire would definitely, the top models would definitely be more than 10 lakh.
Absolutely.
The Ciaz would be more than 10 lakhs for sure.
Right.
Right. And even if you look at, let's say, the Fronx, which Maruti calls it a compact SUV and industry watchers call it a compact SUV. I still believe it's a slightly bloated up hatchback, but most of these hatchbacks are also now the top trims and the top few variants are above the 10 lakh rupee price point. Now, last week numbers had also suggested that in the SUV space itself, and SUV is also very widely defined from compact SUV to mid-side SUV to sub 4 meter, exceeding 4 meter, and there are so many trims within the SUV category. Maruti Suzuki already has a 46% market share of SUVs. And that, of course, no, sorry, I think SUVs have a 46% market share of total number of cars being sold, and Maruti has a sizable 25% or so market share in that. Now, within this 10 to 20 lakh rupee price cap, Maruti is already talking about what I think a 23% market share or so.
That is correct, 23%.
And now imagine with new models getting launched like the Invicto, with electric vehicles. I think the first one is slated for FY25, which means anytime between April next year to March 2025. The first electric vehicle from Maruti's stable is likely to be released, and another 6 electric vehicles lined up till 2030. I think the roadmap, the strategic roadmap is fairly clearly laid out for Maruti Suzuki, that it's not going to be a hatchback market leader anymore. It's not going to be a laggard when it comes, like you mentioned, when it comes to SUVs or electric vehicles. It has been a laggard already in both these segments, but I think it wants to more than recoup its lost time by aggressively introducing these new models. And look at this financial year alone. You have the launch of Jimny. You have the launch of the Invicto. These are two big sort of, you know, announcements coming from Maruti's stable that these are not small-sized cars, and these are not the regular Ciaz or Desire lookalikes in the market. These are pretty serious cars for the serious consumer out there. And add to that, of course, last year you saw the launch of the Grand Vitara, which was Maruti's first inroad into the hybrid category. And hybrid, of course, being a sort of, you know, a midway between an ICE and an electric vehicle engine. So hybrid, based, of course, on the same technology that that Toyota deploys in some of its cars, and that is exactly what it did even with the Invicto, which pretty much runs on the same technology, on the same platform as the Toyota Innova Hycross. So Maruti is pretty much there for the long haul, which there was no doubt of in any case. And it is taking its entry into bigger cars, more expensive cars, the more premiumized version of the market, far more seriously than one would have anticipated a few years back.
Than it did a couple of years ago, of course. So Maruti there, you know, betting big and of course getting a larger share of the pie, not just in small cars, in cars under 10 lakh category, but also a sizable chunk now, 23% share in the segment, in the cars between 10 lakh to 20 lakh rupees categories. We're going to move on to another interesting story coming out of auto space, and that is with respect to Renault. Renault, it appears, is planning to drive in new models into India by 2025. It already has, from what I know, it has Kwid, Triber, Kiger. 3 more models likely to come up from Renault.
So I think, yeah, let's just continue the story that we started with Maruti, and let's sort of, drive it into Renault's garages as well. It's pretty much the same category that everybody is after. It is that 46% market share that India already commands in the SUV space. SUVs commanding a 46% share of the Indian automobile market.
Right.
Now remember, Renault again is a very interesting case in point. Why? Because Renault was among the first companies out there to launch an electric vehicle, and that unit got sold eventually to Mahindra and Mahindra, and sort of translated into the fleet segment. But remember, when you say Renault and you go on the streets and you ask a regular common Indian, a bit of an auto enthusiast Indian, if I may add, about Renault, I think pretty much the first name that pops out is going to be the Renault Duster. And the Renault Duster pretty much defined the SUV affordability category for India. Remember when it launched, I forget which year, I think it must have been 2011, 2012.
Absolutely.
It was launched at a price point of 7,50,000 rupees. You could own a big SUV, it wasn't a sub 4 meter SUV, for 7,50,000 rupees. Of course, those were the days that even the Honda City was available at 7,50,000 rupees, but and prices have overall increased. But Renault was the first mover to introduce India to SUVs. India did not have SUVs up until then, and it obviously sold like hot cakes. It sold like hot Renault Dusters, and the gang of Dusters and the sort of the whole pomp that went around that cult car was very impressive. Now Renault wants to. It obviously exited for whatever reasons prior to the SUV market really maturing. But from what I understand, I think it is going to be the SUV market that Renault wants to go after, and is not going to shy away from that. Right now, the 3 cars that are being sold by the Renault company in India are Kwid, Kiger, and Triber. And these, of course, are not premium cars. These are not expensive cars. These are very affordable cars. But I think Renault wants to go after the SUV market, and it is promising to release, I think, 3 models in the coming financial year by FY25, and thereafter by 2030, pretty much like Maruti, it has its own roadmap laid out as well. So it seems like it is going to be the SUV category. It is going to be the EV category, and I think it is also going to be the EV SUV category. So SUVs running on electric vehicle technology rather than ICE engines, and that seems to be the road ahead for pretty much everybody. Automaker.
Just this morning, in fact, Mahindra is looking at a bigger share of the pie as far as EVs is concerned. So EVs, of course, is going to be a major focal point for all the SUV car makers, and not just the sub 10 lakh rupee category, but more so the over 10 lakh rupee, between 10 to 20 lakh rupee and over 20 lakh rupee categories.
Now, my only fear, Shweta, you're right. I think, that seems to definitely be the focus for all automakers. But that focus comes from where? I think it stems from the fact that we saw some very good numbers in EV offtake last year. 2-wheelers, 3-wheelers pretty much, ruled the roost. 2-wheelers had 1 million plus. 4-wheelers also increased their penetration from 1% to about 4% of the market, and India is a large market. So 4% on absolute terms is a big number to go by.
Absolutely.
Right. Now, with this confusion over the FAME subsidy, and you of course are an expert on that subject, but I think with this confusion over the subsidy regime, with this confusion on whether consumers will get those subsidies, get a discounted price on their EVs or not, and thereafter the whole the whole focus on e-highways, e-mobility highways, and this talk on battery swapping facilities, which nobody yet has any clue about. I mean, you go to an Indian Oil petrol pump, you see there is a battery swapping station. Nobody lined up to actually exchange that battery. And secondly, batteries don't come with the same specifications that a scooter battery will go into a car battery, will go into a 3-wheeler battery, will go into, let's say, a bus or a truck's battery compartment. So the point is, there is still a lot of confusion on how EVs are going to get popularized by Government of India. Right. And when I talk about EVs, again, I'm talking about the whole chain, right from 2-wheelers all the way to public transport. And until that clarity comes in, I think those who want to take EV as their primary driving vehicle will look at it with some suspicion. Those who can afford to buy a second or a third city running car as an EV, that you have your charging point at home or in your office parking dedicated, and you come and you plug it in and it charges, and you don't have to worry about long distances and highway driving, I think adoption is going to take place there. But overall, it's about time that the government very, very clearly comes out and discloses its real long-term vision for promoting electric vehicles. And unless that happens, I think all the investments that are being made by large companies, small two-wheeler manufacturers, and anybody across the board, even when you talk about localization with respect to batteries being made in India, etc., I think all those rules of engagement for EV will have to be written down very, very clearly, with a guarantee that they are not going to change. There won't be any U-turn on those rules next year or 3 years later or 5 years later.
And Amit, you've been speaking to a lot of people in Niti Aayog who are directly dealing with e-mobility, who are dealing with FAME subsidy, who are dealing with literally electric vehicles and the future of electric mobility in India. My understanding from when I spoke to you and I heard your interviews is that, what people are wanting in power, which is Niti Aayog, the operational body here, trying to brainstorm what the future of EVs is going to be, they are of the view that you need to make e-mobility possible by the way of infrastructure first. But what the car makers, the two-wheeler makers are asking is, you make it easy for people to buy it first, which is you give an upfront subsidy. When the adoption happens, infrastructure will follow through. So there is, of course, a lack of clarity there, and a lack of maybe a cohesive approach. Both these players are not in tandem with each other on what the future is going to be.
Yeah, they have tried one approach, which we'll call in economic terms demand pull, where they basically subsidized the vehicle itself. And that worked to some extent, did not work to some extent, probably because the other side, the infrastructure was not there. So now they are shifting policy to focus on the infrastructure. So that is, like you said, there has been basically, they're trying the 52 cards. So they have tried one, now they're going to the other, but they are doing it very aggressively. So we will see a lot of infrastructure, whether it is e-mobility, highways, electric highways, all that, coming up in the times to come, and sooner than we expect. But yeah, there was one kind of approach up to some time ago, which has changed now, and now they are focusing on basically spreading the subsidy to the other side. Whether it is batteries or whether it is infrastructure in what goes into electric mobility. And especially right now, e-mobility, as their surveys suggest and what I could get from the people who are owning or buying electric vehicles are using them within city. That is not an option that many people are taking to basically go from, say, from here to Jaipur. But Delhi to Jaipur, Delhi to Agra, the e-highways are ready right now, or will be ready, will be the first ones to get ready. So let's see how that plays out.
Right.
Regarding Renault, Karthik has been very elaborate. There's one little point probably that also should be looked at, as the French are coming. The other car, which is basically the most reputed French car, which came the last in India, reputed in the sense it wears a badge of honor. I mean, people who own a Citroen boast a Citroen.
Okay.
They have priced their lowest car, which is, they have not come into SUVs. They priced the lowest car at 6 lakhs, and their EV EC3 is at 11.5 lakhs. Renault being another French one, probably they're looking at competition from home turf also, and being aggressive in going into an area where Citroen is not going.
Okay.
Karthik will have something to say on that.
No, I think the Citroen, I feel, it was launched last year, and the Citroen has not yet, to my mind, bought into the trust factor when it comes to Indian consumers. I don't know if numbers are going to support me, but I believe Citroen has not had the kind of sales that other new product launches from more trusted brands in India thus far have seen. And Renault has that advantage over Citroen, I believe, because Renault has been around for longer, has sold successful products, has sold brands which people are still familiar with, whether it is the Duster or even the small sized Quid. So these are cars that you see, these are logos that you see more often on the roads, and hence your likelihood to sort of, jump ship or jump car in this case and latch on to that brand versus a Citroen, or even, since you're talking about French brands, even Peugeot. If that were to come back into India, Peugeot was in India in the 1990s. I think it had one model, if I'm not mistaken, which sold a few numbers but did not really reach that scale. Of course, I'm talking about 1990s, and there wasn't as much scale to talk about. But Citroen or Peugeot, for that matter, as compared to, let's say, a Renault, I think Renault for India wins hands down.
But that's also because of the trust factor.
Trust factor,
and the
and the time they spent in that market.
And the serviceability of their car. I think that is one thought that goes behind everybody's mind. If you're going to buy a car, which may be a high-end luxury car, is it going to be easily serviceable?
Or even a small car for that matter. Even a guy buying a small car.
You want it to be serviceable.
You want it to be a Maruti Alto.
Absolutely.
You don't want it to be maybe a Citroen C3 or
whatever
that brand is.
It's interesting you mentioned that, because as Indians, I think, and this is out there on surveys, that we care a little less about the safety of the car as opposed to the serviceability of the car.
Thankfully, Shweta, and this is an area where I would really like to pay my compliments to our Honorable Minister, Mr. Nitin Gadkari. I think he has been in the driver's seat when it comes to Indian automakers taking safety seriously. Right. Of course, the cost of that safety does get passed on to the end consumer, but the fact that rare seat belts become mandatory in cars of all sizes across all trims, airbags becoming mandatory, and I think even ABS, the anti-skid braking system, is also likely to become mandatory. So I think overall we are moving into a more mature market where we are building highways which transport people at much higher speeds. We are building cars which come with certain safety features without which those cars will not be allowed to sell in India. And overall, the consumer per se is also a little more aware of these safety features, and those who can afford it are going in for cars which are higher on safety features rather than those which are a little cheaper but compromise on safety. So I think the market is definitely maturing in the right direction.
That's good news, of course. Their market is maturing as far as four-wheelers, two-wheelers is concerned. So overall, industry is maturing. Automobile industry, they're reporting better numbers. But with respect to Renault and Maruti, particularly Renault getting 3 more models into India by 2025, and Maruti is now at 23% share in the market segment of 10 lakh to 20 lakh rupees category. But shifting focus to what fuels the automobile industry till date, and that is oil. We're now given to understand that the discount on Russian oil, Karthik, is now down by as much as 87%. I think my first question to you on behalf of our viewers will be, does this mean oil prices are going to go up?
Absolutely. And that is bad news on many accounts. Now, let's try and put this into perspective. Ever since the Russia-Ukraine war broke out last year, there were sanctions imposed on Russia, and those sanctions prevented Russian oil being sold directly in the US and European markets. And US and Europe both are guzzlers when it comes to oil. So is India, so is China, but not in as much measure as US and Europe, if you look at these two primary markets. Now, India, of course, has always been an oil importing nation, and one of the biggest damages to India's current account deficit, or trade deficit as we call it, the difference between India's imports and exports. Why India always stays in a deficit is because of our oil, right? The import bill that we have on oil. In fact, last fiscal, if numbers serve me correctly, our oil import bill was about $160 billion. Now, $160 billion of oil bill when 40% of our oil was being procured by Russia, which gave us a discount of up to $25 to $30 per barrel, as opposed to what was available in the open market. And I think oil prices have roughly ranged between the $65 to $70 per barrel. Right, last year at some point when OPEC was cutting production to level prices, the target was to take it up beyond $80 per barrel. But if you were to look at a benchmark of $70 per barrel and a discount of about $30 per barrel from Russia, which accounted for 40% of our oil bill, I'm talking about Russian oil being bought by India at about $60 billion or so. This is after the discount. Now, if this discount were to almost go, 87% is almost knocking off the entire discount, right? If this discount was to go and if oil prices were to be sold at par with, let's say, the OPEC regions at about $70 per barrel, then you're looking at a dent of another $30 to $40 billion on account of Russian oil alone. Now, this has, of course, a direct impact on current account deficit, a direct impact on trade deficit, the difference between export and import. But it also does not make the oil that gets refined in India, the Russian oil getting refined, let's say at the Jamnagar refinery of Reliance Industries, being exported via the sea route to Europe after the value addition that happens, being exported to Europe. Now, even that export becomes expensive. So, overall, the export that India does on refined oil does not become very lucrative. So, India's exports are likely to shrink and India's import bill is likely to rise. So, we are talking about a precarious situation with respect to the current account deficit, and more expensive oil also means more payments perhaps in dollar, right? If we are still trading with Russia, perhaps in yuan, but then yuan and rupee also may be exchanged via the dollar route, I don't know. So, you are talking about, let's say, an equal measure of import now, the 40% share that we had on Russian oil being split equally between Russia and, let's say, the rest of the world. Now, that gets traded again in dollar terms. That means we are buying more dollars to pay in dollars, weakening our rupee. So, overall, when you look at the macroeconomic scenario, this is not good for India's overall GDP growth, financial health, current account deficit, export deficit, and the value of services and goods being exported out of India.
And when you look at as to why it's happening because a very interesting export out of Russia, import to India, and why shipping is becoming increasingly difficult for refiners who are trying to sell their oil to India. So that's where the complexity lies.
It's a European route again, right?
Exactly. So that's where the complexity lies, and that's essentially why the Russian oil seems to be becoming more and more expensive. You know,
but I think there is pressure on Russia and the G7 to hammer up prices up to the market average of about $65 to $70 billion. I think Russia has been able to evade sanctions up until now. G7 and the rest of the world also believes that there is only a point until which sanctions are going to work and sanctions should be implemented. I think over time all these sanctions are also going to perhaps ease out, though there is no end to the war, even as we are 150, 160 days, maybe more into the war. There is, 1 year and about 100 days or so, right? So there is no end to that war. But add to that other complexities of these sanctions, also having an expiry date, having a shelf life, and the pressure on OPEC Plus and the overall damage that is going to do to import of oil across the world, not just India, is going to hurt the rest of the world as well. So overall, this pressure to level up Russian oil prices to about $70 per barrel is going to be bad news. It's going to be okay. It's going to average out for the rest of the world, but bad news specifically for India, which was quenching its oil thirst through Russia.
All right, India seems to be losing advantage there. But another interesting point that I was reading this morning, Karthik, and that is if the oil prices do not level up, if they continue to remain low, we could be losing all that discount after all if the gap between the G7 price cap and the current Russian oil prices narrows further.
Exactly.
Which means we lose out on entire discount.
Exactly. So we are losing out on discount. So that means our imports become expensive and our exports to these European markets also by default become expensive because your raw material price goes up. So you tend to lose on both sides. More expensive imports and exports which are not paying you as much.
Right.
So overall, the whole balance is going to tilt in the negative for India.
It's not lucrative thereafter to buy from Russia.
Not at all. So that's what I'm saying. So this 40% that we bought last year, maybe we'll split it then equally between Russia and the rest of the world, because if the prices are the same, it's not going to really matter as much to us on where we are importing from if the price is the same.
Of course, and that is a big story. We'll keep tracking here. We don't know whether India is going to keep importing from Russia in the future, given that it's becoming increasingly non-lucrative for India to buy from Russia. They're losing out on the discount, and that too by as much as 87%. Remember, if the price gap between the G7 price cap and Russian oil narrows further, it becomes more lucrative for India to buy from other countries and not just Russia. We'll of course keep tracking oil prices for you if they increase at all in the months to come. But shifting focus now to another important story that we're tracking, and that is with respect to the ICC Men's World Cup, which India is likely to host. India is going to host, which means that more and more people are flying into the cities where you will see men's cricket team perform. As a result of which, air prices are going up and the hotel prices are also soaring. Amit, you know, it feels like cricket fans are going to throng into these destinations.
Oh, they're already doing that. So it's almost a frenzy, and Delhi, Calcutta, Ahmedabad, Bangalore, Chennai and Mumbai are the places where in post-October and for at least 90 days, 40 days after that, you may not get even a budget hotel. Even budget hotels are seeing a jump of 70 to 90%, not just the big premium ones. Airfares are basically going up 2 to 3-fold. We were complaining about airfares going up and we were waiting for gophers to come back. But so they're going up 2 to 3-folds. So good time in those days if you're not a cricket enthusiast to explore other parts of India and not these cities where cricket matches are going to go up.
Okay.
But it's going to be a frenzy. It has already started.
It's a frenzy, and you know, it's interesting because obviously cricket tourism is going to drive up more prices, but drive out more profit for you know, from your hoteliers to your airlines. But at the same time, the common man is going to suffer because these are some of the most traveled destinations and common destinations.
Yeah, I think, you know, in this case specifically, Shweta, I will shed my what many term as socialist hat and really wear the capitalist hat. I'm not either. I think I'm fairly neutral. But you know, you're going to watch a match.
Okay.
It's completely optional.
Right.
Right. You're not going for you know, for vacation, which is also optional. But then there are certain compulsions from family, etc. Right. You're not traveling on work. You're not really traveling for something that cannot be avoided. It's not a medical emergency, or it's not sort of, you know, it's not something that your child needs to go and get educated, and hence that travel is imperative. I think cricket matches are fairly optional, and you're buying expensive tickets to go and thong those stadiums and those venues and spend money on those tickets and enjoy the frenzy sitting in the stadium. If you are getting hotels and air tickets more expensive, take it on the chin. You know, it's part of the package.
Right. Now, the reason I said that is because, you know, these are some very commonly traveled destinations, even for work.
Yeah.
Like, for example, Chennai, Delhi, Mumbai, Kolkata, Hyderabad.
Yeah,
these are also destinations where you travel for work, you travel for medical purposes, and all the other various reasons. So my concern is you can't really differentiate between a person going to travel for what are you traveling for?
Yeah, of course. I mean, it is bound to hurt somebody who is not traveling to those cities on those specific dates to specifically watch the match in the stadium.
And I want to come to Amit regarding dates. I think it's also important for our viewers to also tell us which are these dates.
I don't have the exact ones, but
so
yeah, it's
5th October. 5th October is when it starts. So 5th October you've got England, New Zealand. 6th October.
24th of October is India, Pakistan, if I'm not wrong.
Yeah, I think so. I think no, India, Pakistan is on 15th of October. India, Pakistan is on 15th of October. So yeah, I mean, let's see what city that match is going to be held at, because that is definitely going to be that is in Ahmedabad. Yeah, so I think Ahmedabad.
The biggest stadium.
Yeah, the biggest stadium, Ahmedabad, and Ahmedabad hotel rooms are already going for 50,000 rupees a night.
Okay.
50,000 rupees a night. If you book tickets today, we are sitting on what, 10th of July. August, September, October, 3 months in advance. If you book hotels in Ahmedabad today, 50,000 rupees a night. And add to that, of course, the airfares going at 2%, 2x, 3x of the original cost. We are talking about burning a very, very sizable hole in the pocket of anybody who's going to go and watch that match. And I think the pressure then is going to be that much more on the Indian cricket team to not lose that match at least. India-Pakistan in Ahmedabad, 50,000 rupees a room night, you're not going to lose that match, come what may.
But it's good time for watering holes over there. It's a dry state. So if India wins, the people will be rushing to some place. If India loses, again people will be rushing to some place. I would advise basically anybody who has gone to Goa in the month of December. There are these youngsters who go to Goa who do not have a hotel booking because there is none.
Right.
And they backpack and find places with local residents. Airbnb had come later on. I believe that is something that is going to drive up basically business in these cities during the World Cup.
Yeah, business, and since we're talking about business, we're given to understand OYO is going to add another 500 hotels, new hotels, specifically in these destinations and around the time of the cricket matches.
Perfect timing, right? Perfect timing.
Absolutely.
I mean, launch these do up these new properties and milk them to the hilt. And let's talk about the specific venues. I've got them now. So 8th October, India, Australia in Chennai. 11th October, Delhi. 15th October, Ahmedabad. We just spoke about Pakistan. India-Pakistan match. 19th October, Pune, followed by even interesting cities like Dharamshala. Dharamshala has a beautiful stadium.
Absolutely.
So,
Right.
I hope the flood situation in Himachal sort of,
improve.
does not make as much damage to the roads, to travel, to property there, and it becomes sort of, all right, well in time again. But I think, again, India is missing out on these critical tourism opportunities. And this is something that we did miss out on even during the Commonwealth Games. And that is to really develop cities which are already not inundated with too many opportunities. I think this was an ideal time. Of course, the capital now has shifted. Andhra's capital has shifted from Amravati to Vizag. But I think this was a great opportunity to develop a city like Amravati around sports tourism, or a city like Bhubaneswar, right, Odisha, which is so big on sports. I think this was the time to come up with new stadiums. This was the time to come up with new highways being built and hotels being built to cater to the kind of tourism frenzy that happens around World Cup, and develop cities, redevelop existing clusters that needed that development, rather than again infusing more footfalls into cities like Delhi, Chennai,
Mumbai,
Bangalore, Mumbai, Ahmedabad, which already have enough and more opportunities. So I think we've again squarely missed that opportunity of looking at key tier 2, tier 3 cities that needed that fillip when it comes to development. Absolutely. I think the kind of indirect impact that would have had on the economy over time, the multiplier would have been really, something that we should have dealt with well ahead of time.
Yeah. Absolutely.
I can talk about Dehradun. They have done part of it. We have a world-class stadium over there which has been constructed, but the infrastructure that's required around it, hotels and all that are yet to come up.
Absolutely.
So probably that's why those tier 2 cities, it has been a sort of haphazard sort of infrastructure development.
I mean, imagine Dehradun, and both of you come from Dehradun.
Yes,
so
I had that example.
out. In fact, but Dehradun, I think it has the Jolly Grant Airport, it has air connectivity, it has a Shatabdi, and I think even a Vande Bharat, if I'm not mistaken now, right? It has a Vande Bharat and a Shatabdi plying into the city. It has excellent highways. In fact, the travel time from Delhi to Dehradun by road has been cut down to 4 hours, right?
Four and a half hours.
And 4.5 hours if you take that break at Cheetal.
Yeah.
If you don't, it's 4 hours. So I think it was an ideal, opportune moment to develop infrastructure, hotels, around leisure activities, hospitality around a city like Dehradun and give it that fillip. Imagine the kind of jobs that Dehradun would have created in the hospitality sector. Imagine the kind of restaurants that would have come up on the highway ahead of time. They would still come up, but you would have been able to shortchange that 10-year horizon by about maybe 2 years, 3 years
or 3 years.
So.
But it
that
hasn't
would have really given that fillip.
Absolutely, it would have given that fillip. It hasn't happened. I'm supposed to wrap this up. As interesting as it's getting, remember these are key dates. Those are key destinations as we discussed on the show. From October, the month of October, it's going to be difficult for you to travel if you're ready to shell out more money to pay for airfares in the key areas such as Ahmedabad, Chennai, Delhi, Mumbai and Bangalore, because that's where the ICC Men's World Cup will be hosted in key locations across country. We will of course keep bringing you all those details right here on Newsline. Thanks very much for watching.
ChatGPT. It can generate codes and human-like responses through text, write stories, and do a lot more.
I work in a newsroom with anchors, researchers and scriptwriters, graphic artists, producers, video editors, camera crew. But does a newsroom really need them today?
All of us have to think about unique and distinctive value addition that cannot be automated or repeated or replaced by a machine.
ChatGPT may kill many companies.
A human has to be in the loop with an ability to control this.
Dark Side of the Boon. Streaming now.
Now, migrant voters has been a problem before the Election Commission for a long time.
78% of domestic migrants possess a voter ID card. Of these, 60% fail to cast their votes.
Now, why political parties have not really paid attention to them is because, you require people who are static, living in their homes, to be able to target them to your prachar and propaganda.
The Election Commission has proposed a voting mechanism to help these voters vote from wherever they are.